unforgettable Charles Payne, who is unforgettable and has a fabulous show. Joining us, Charles Payne, host of Making Money on Fox Business and the author of a very good book, Unbreakable Investor. Charles, thank you for spending a little bit of time with us. Look, I don't know everything there is to know. You're a stock market expert. I'll just say two things on this sort of correction. It's more of a Dow correction. I understand that. But still, first point I want to say is, I thought rumors that maybe the reality, that the tax cuts would be postponed way until the back end of the year were already hurting the stock market. Then yesterday, the Fed's flip-flop or whatever it was, they should have said, we blew it. Now we see higher inflation. We actually see a stronger economy. So why'd you be cutting interest rates the way you did in September and November and yesterday? So, I mean, I just think the markets are befuddled with uncertainty and don't understand either fiscal or monetary promises.
Well, the rally, the animal spirits are based on Trump 2.0.
Right.
And anything that may interrupt that or derail that is going to scare the market.
Yeah.
Because that's what the rally is based on. You know, you got a couple of things. First and foremost, I thought yesterday's sell-off was an indictment of Jay Powell.
Yes.
I thought it was
100%.
an indictment of Jay Powell. You know, the changes that they've made in their economic projections in just 3 months were just mind-boggling. Like, you can't be off that much. And why do you see the GDP going up from 2% to 2.1%, but inflation going up 0.4%, and then Fed funds going up even more? Like, none of it even connected. The dots didn't connect mathematically. And here's the other problem. Right now, they're taking 16% of tax revenue just to pay the interest rates. That's scheduled to go up over 20% early in Trump's administration. But if it's higher for longer, we could be talking 25%. That's a dilemma.
Right.
And then the strong dollar. The strong dollar plays right into China's hands, the tariff war, right? How does China really fight against a tariff battle? They could artificially lower the renminbi. Now, they would be hard on the world stage, and we would give them hell for it. But if the dollar went up, then that would do the job for them already. So already, you know, we're at a place like, if we can't trust the Fed, and the greater part of valor is to have a stronger dollar, you know, investors.
What's wrong? I mean, it's not an exploding dollar like the Plaza Accords of 1985.
No, it's not an exploding dollar, but it went to like a 2-year high. It's breaking out. Like, anytime something breaks out, you have to become a little bit concerned about it, because where does it go once it breaks out, and if this uncertainty exists? So I don't think I think all the uncertainty is under the folks who are involved in this, right? You had a great interview just a moment ago. I love watching you now. Listen, both of those are two of my favorite folks.
Yeah, they're good folks.
Right. But everything you slammed them with was right. It was 100% right. You know, it's
They're
like
throwing pancakes at me, and I don't like it one bit.
Why keep doing Why keep doing paint by numbers?
Yes.
Business as usual.
Right.
Why do it?
Show me something. One thing is, again, I don't want to repeat the segment, but for God's sakes, get rid of the debt ceiling. It's the stupidest darn thing. And pay-go, there's never any spending cuts anymore. But I want to come back to the Fed for a minute. So just common sense-wise. Okay, look. If the Fed is telling us, this is Jay Powell, okay? The Fed's telling us inflation is higher than they thought, and it's going to be longer than they thought, right? The latest estimates are they won't hit their 2% target until 2027.
Right.
Okay, that's a long time from now.
Right.
If they're saying that, Charles, then why are they cutting interest rates?
Right.
And
well, here's the dilemma.
Doesn't that spook investors and ordinary people what's your message to me? You're saying inflation is worse. I agree. Bidenflation is very sticky. I get that. Then why are you feeding into it with lower interest rates and more money supply?
Larry, they do have a dilemma. So in September, we got from the Bureau of Labor Statistics the breakdown of household spending, right, according to the CPI report. So the top 20% quintile in 2023 did 44% of the spending. The next did 27%. So combined, they did 70% of the spending. That drives your consumption numbers. The rest of the households couldn't keep up. So to curb that spending of the most fortunate 40% of the nation, the Fed's got to hike rates. But when you hike rates, also that means my credit card goes from 15% to 23%. Again, I'm not in the top quintile. I'm having trouble paying my bills. And now on top of that, when I go to the grocery store, not only grocery prices higher, but when I use my credit card to pay for it, I'm paying even more. And that was the legacy of Biden in my mind.
But the best thing they could do, okay, I know this, you know, we've had a recession or semi-recession for the bottom 50% for the last 4 years.
Right.
I mean, Scott Bessent, the Treasury Secretary, or to be, has said that frequently, right? They're the ones who suffered the most.
Right.
You can go down the scale, too. I understand that. What you say is right. The thing to help them would be lower inflation. If somehow the Fed would stick to its target, I don't want them to be jacking rates up. I'm just saying stop cutting rates. By the way, they could slim down their balance sheet and take some of the high-powered liquidity that the wealthy are using in the stock market out of circulation. That would help. Nothing would help those folks who are working than lower inflation, particularly lower prices, grocery prices, gasoline prices. Point number 2, I want to give them more tax cuts. I want to give them more tax cuts so their take-home pay will be stronger.
Absolutely.
All right, now,
I'm with you 1,000%.
You and I are on the same page. We always have been. I'm just saying, though, all that's a long stone's throw from what the Fed's doing. They are goofing around. They are saying black is white, white is black. No. How can you understand a central bank that is making mistakes, won't acknowledge it, their models have failed, and their strategy on inflation is failing?
So
how do you figure?
When Jay Powell yesterday said that finding a job that it's been pulling back moderately, I used the chart on my show yesterday and today. No, it's fallen off a cliff. It's collapsed. A long-term unemployment over 27 weeks is skyrocketing. Job listings by Indeed has fallen off a cliff. And so when I hear the Federal Reserve Chairman talk about these things in such a casual manner, it scares the hell out of me. It's not what's happening is that you don't have a grasp on what's happening. And then when you're data dependent, and the data is revised so dramatically month after month, you mean to tell me that you're basing policies on faulty information? You've got all the PhDs in the world. You have access to every business out there. Get ahead of the curve sometime.
We got to get out. You know what? It's because they have all the PhDs.
You're right.
That's point number 1.
They used to have like non-PhDs and they were getting the job done much better.
People who worked in business. And point number 2, you know what I would say? Try to deregulate everything in business we can deregulate, and that'll create more.
Get that organic growth going.
Charles Payne's the best of the best.